Guys, Tesla is up 51% in the last 1 month. That is right, 51%. When I see Twitter back to talking about how these are the stocks you need to own forever, and Tesla's one of them again, after we had the flip. Mo, what was it before? Before, when Tesla was at 415 2.5 years ago, it was Tesla stock forever. Yeah. Then what happened?
Then Elon went to buy Twitter, now X, if I remember correctly.
Correct.
There's a lot of news that drove this stock around.
Yep, and news.
Nothing fundamental.
No, that's right.
As a matter of fact, everything fundamental is getting better and better and better.
At 415 to now, 262, revenue's almost doubled, up almost 100%.
Yeah, I'd like to just show. Are you talking about 2021?
Yeah, the peak of 414, which was on, November 4th, 2021.
$53.82 billion in revenue in 2021.
In the last 12 months?
Last 12 months, $94.75 billion.
Guys, it's like 90% increase in revenue. This is proof, absolute proof that news follows the stock price. I've said before, I'll say it again. There will be a time when people say you're stupid to own Tesla. That all the bulls who sit there and say, I love Tesla, I would never sell Tesla, will have their reason for selling Tesla. Tesla will be a much better company in the future than it is today, when everybody's saying you got to own Tesla forever. And that's the beauty of investing. It's the emotional part. Emotion drives investing. What I'm trying to teach is this process of looking at it and saying, wait a second, if the fundamentals are getting better and it made sense at X price and now the price has fallen, why would I not buy more? But what usually happens out there, and what's going to make you different as an investor, is you're going to realize that this is just a ticker price. What matters is the fundamentals of the company, the revenue, the profit. And as long as the revenue and profit are growing and the business is getting better, as the stock falls, you should want more of it. Now, making the initial purchase is important because you have to sit there and realize that every investment is the present value of all future cash flow. And now, Mo, on that very same Twitter, I'm getting people saying, Paul, you don't understand the power of this company being a tech company. FSD is huge. Now, FSD is huge. For those who don't know, that's full self-driving. And they're charging currently $99 per month. Mo, what do you think the gross margin is on this? By the way, gross margin means for every unit they sell, how much of this is profit before overhead and all that stuff?
70%?
I would guess it's 70 or 80%. Let's call it 75%. So every extra unit they sell, they're getting $75 probably per month in extra added profit. Okay. So times 12 months equals $900 per year in extra cash flow. All right. So every extra unit they sell, if you apply a 20 multiple to this, it adds $18,000 in market cap, right? So we had $75 a month in profit times 12 months, $900 times 20 PE equals $18,000 in value for every time they sell a unit. Now, to generate the Cathie Wood idea of trillions of dollars in value driven by their technology. Right now, they're they're more than that, a $700 billion company. Let's call it 1 trillion.
913 billion.
I'm sorry. So $1 trillion market cap. Yeah. To get to $5 trillion, that's $4 trillion in value. Divide that by the 18,000 per car they sell FSD on. What's the total value? They have to be in 222 million cars.
Jeez, oh man.
Okay, before I get into how unreasonable this number is, I just want you to understand this. This is very, very important for understanding investing. The story about FSD is wonderful. The story about Tesla is wonderful. I'm not against Tesla. I have a Cybertruck on order. I had a Model X Plaid. I'm not against Tesla. I love Tesla. I think Elon Musk is brilliant. But I separate stock from the actual company. I don't know where Tesla stock is going in the next few months. I don't know where it's going in the future. My job here, and what I'm trying to teach you, is that you have to look at Tesla and say, can I pay a reasonable price for the company today that makes sense on this company? I'm only focusing on FSD. Mo, 50 million cars a year are sold worldwide.
Okay.
Now, remember, our goal is to have 222 million cars actively buying FSD.
There are 283.4 million vehicles registered in the United States as of 2022. Now, of course, that's not we're talking worldwide, but
in the US, 283 million. Okay, now, Mo, worldwide.
Yeah.
What do you think the value of a car has to be for you to justify spending $900 a year on FSD? So that's the issue here, guys. We're in the US where the average car is like new car is like $40,000. Okay. In the US, we sell 20 million new cars a year. I don't think it's quite 20 million, but let's call it 20 million. That means it would take 11 years of 100% of the cars on brand new cars selling. Now, you sit there and say, well, Paul, some people are going to buy it for their car. I get it. If it was all brand new cars, because Buick just signed a deal with Tesla about they're talking about it. It's very close in talks about putting FSD in their cars. Wonderful. But it has to be put into there. I don't know what the other technology will be, but let's assume every single car for the next 11 years, they'd finally get there. That 50 million cars, not $50 million. This is what I'm looking at going, it's going to take 11 years to get that covered.
Assuming that every single car.
Correct.
That's like best case scenario.
Now, if 50 million cars are sold worldwide, let's say 25% of them, which is an egregious amount of percent, buy this. 12.5 million, what are we at? 18 years or so of cars before they get there. My point about this isn't to say it's going to take longer. My point is to say it's probably not likely. And in that time, what's going to happen with technology? Are other people going to come out with other versions of FSD? Maybe, maybe not. There was MapQuest for a long time, then it was Google Maps, and now it's Apple Maps, right? Mm-hmm. I look at this saying, guys, FSD has a great future. But to just add $1 billion in free cash flow to Tesla, $1 billion in free cash flow would be $20 billion in value at a 20 PE times 20. Remember, $18,000 per car in value. It takes 1.1 million cars having this software. 1.1 million. Why do I keep putting dollar signs here? I'm so used to it. Guys, this year they're hoping to sell 1.8 million cars. Now, is there a lot of growth potential in this? Absolutely. But remember, people said before, oh, Tesla's going to grow like crazy. Guys, they're struggling to even hit this 1.8 million. Yep. The stock is up a ton. And guess what happened? They missed their deliveries. They didn't even hit their deliveries. Guys, this 51% run-up is a combination of many things. I think one of them is short sellers having to bail. Now, maybe I'm wrong because now I read today, like short selling has gone up to 3.7% of shares outstanding are now short on Tesla. Wow. The point I'm trying to make about all this data is, guys, there's a great story. But as Professor Oswald says, a story without numbers is a fairy tale. Numbers without a story is an Excel sheet. You got to couple them together. The story of FSD is a wonderful story. It's a great story. The numbers on FSD, not so much. And how much has the FSD price fallen?
Oh, yeah.
It used to be, what, $12,000?
$12,000, then it dropped to
It was a
10.
one-time $12,000.
Yep, then it dropped to 10, then it dropped to $99 a month.
I don't know, guys.
And at the same point, like, I probably, if the software wasn't perfect, I probably wouldn't pay $99 a month even if I had a Tesla.
But look at this. This is just autopilot. This is not even full self-driving. Tesla vehicles using autopilot technology. Look at how many millions of miles driven per accident. It's only gotten better. 7.63 million miles driven before an accident, when the US average is 670,000 miles. This is 12 times safer. Wow. Now, I also saw some other report that said Tesla's had the most accidents from November 2022 to November 2023. I don't know what that was about, but this is a report here, and it says Tesla vehicles not using autopilot. It was still better by 50% than the US average. But how much better using autopilot? Guys, the autopilot, the full self-driving, it is absolutely awesome. I love hearing about it. It is a great tool, but don't overpay for that. Now, guys, this is exactly how our community talks about stocks. It is not just a ticker price. We have to look way beyond the ticker price. There is something behind that price. There's a value. And our goal, and the goal I'm trying to teach here is whatever you're looking at investing in, I want you to have a new way of thinking. And that way of thinking is there's a value and there's a price. I want to buy when value is significantly higher than prices. And that's why this whole entire software is made. But if you watched our channel before, you've probably noticed that we have limited daily spots for this community and software. And the reason for that is because the software, as it exists today, includes everything we have to offer for stocks, retirement, and real estate. As you can tell from all these tools up here, it helps you in all those areas. Now, we are making some changes behind the scenes so that in the near future, that offer is going away. As we've been getting feedback from our community members, people have expressed that they want us to focus on specific aspects of Everything Money for them. They want to focus on what applies to them in that moment. They don't want to have too many options like the Cheesecake Factory. They want to say, this is what I'm focused on right now. So if you've been watching for a while, you'll remember that I built this software selfishly for myself. That's how the software started. People asked, how do I get that software? And it was always built for my team and I, so we could use it to constantly make the right decisions for real estate, stocks, and retirement. But as the channel has grown and our community has grown, it obviously has to become a lot less about me and more about how I can better serve you and the community members. So the good news is we have not made those changes yet. So if you go there today and join, you'll be grandfathered in for life with all of these tools. 100% of them, you'll get them for life no matter what. And I'm telling you this now because you still have that time. So go click at the link below before we make these changes. Go do it right now. If you sign up today, you'll be able to keep all the tools even after we make those changes. And trust me, this will be the best decision you've made all year. That is what's key about investing with like-minded people. There are people in our community who absolutely love Tesla and think it's awesome. And I would tell people out there, if you own Tesla stock and bought it real cheap, it's hard to decide, should you stay in or stay out? Is there a lot of potential for Tesla? Of course. But right now, the numbers look like a car company. $95 billion in revenue, $13 billion in profit. It's better than the average car company, don't get me wrong. But you have to sit there and realize that over 90% of its revenue comes from cars. I just think it was 83, 84%, Mo. Remember we did the numbers? Like, well, wait a second. The other services included like used car sales. And I was like, wait a second. It's like 90% plus cars. Guys, if I'm a high school athlete and I'm a top prospect, I'm not a professional athlete yet. Don't pay me professional athlete money. Let Tesla become the software business that you think they're going to become. Valued in there. You have to account for that. But remember, you got to sit there and put some sort of value to that future and the chance of it happening. So let's see what analysts are saying about this. Mo, do you see this? Big time growth in EPS according to analysts. Almost tripling.
Oh, yeah.
I was surprised to see this. A drop this year of 20%, but going to $7.43 in the next 4 or 5 years.
Revenue doubling.
Revenue
doubling.
From 100 to 208 billion. You know what the interesting part is, Mo? If this 208 billion was all software and they were like Microsoft that had 30% bottom line, it'd be a $60 billion business, which is still 15 PE and today's numbers. Guys, that's what I mean. People are overpaying for the future. They're overpaying for the future. The average car company sells for between 0.5 and 1 times revenue. Tesla's currently selling for almost 10 times revenue. This is Microsoft money. Microsoft's like 13, but fair value is probably around 10 times revenue or something lower than that. People are valuing this as a software company 100% without a car component. If you don't agree with me that it's a car component company, I don't have to tell you. If you used to think that and go, wait a second, those numbers are adding up, I think there's hope for you. I do think there's value to Tesla being a software business. The question is, what's that value? So that's when we pull up Stock Analyzer tool. Mo, I'm going to pull up the last time I did Tesla.
So I remember when I did this one and I did a low, middle, and a ridiculous high. So we can go through that if you want.
Oh, revenue growth.
Same numbers.
7, 20, and 60% revenue growth. By the way, I only did 5 years though. Yeah. Profit margin, 8, 20, and 35. This makes it more software-like.
Yep.
Right? So we're sitting there saying, listen, they crush it next 5 years. And guys, they're not going to have this kind of profit margin. 20% revenue. I mean, I don't, well, maybe it will in the next 5 years. Maybe it will. PE, I did 18, 25, and 30. What about you?
I did the same numbers.
Okay. And a 9% desired return because that's the market return, 9 or 10%. Let's put, what's the market value? But remember, you need to have a higher, when you're doing this yourself in the software, you need to put a higher desired return for a larger margin of safety. You need margin of safety because the future is unknown and we're humans. We make mistakes. You've got to be able to sit there and factor in what mistakes am I making in all of these assumptions. You are making mistakes. We are. I am. I'm making a ton of mistakes. The question is, what's my margin of safety? But here's what's interesting. Let's hit the analyze button.
By the way, the 5-year analysis was for Kathy Wood's 2030 prediction.
Correct. Guys, 44 on the low side, 2,000 on the high side with 60% revenue growth, 247 in the middle. So if you want to see my reaction video to Kathy Wood's egregious price target for Tesla, watch this next video. Thank you for your time.